Crypto does well in this environment because it is a way out. Right? Every time you debase the currency over time, crypto goes up. And it doesn't go up just by a factor of the devaluation. It goes up by a large multiple because it's a technology that's building a parallel system here. So it can only be bullish.
China, Russia, India, Brazil, Saudi Arabia, and Indonesia have decided to conduct trade in their own respective currencies instead of using the dollar as base currency. To put things in perspective, these 7 countries account for roughly $26.6 trillion. That's 52% of the world's GDP, and have reserves at an estimated value of $4.46 trillion. These 7 countries account for 41% of the total world trade. Now imagine these countries dumping the dollar in their world trade in favor of their own currency. That would significantly impact the purchasing power of the dollar and the values of all the assets denominated in dollars. This sudden debasement will impact how things are valued, how imported goods are priced, and ultimately it will affect the purchasing power of every American. But there is one silver lining. Assets which have use case and solve some kind of modern world problem will become more attractive in this scenario. Crypto, for example. Crypto is decentralized, solves a modern world problem of high transaction costs and the low time it takes. But according to Raoul Pal, there is no denying that the dollar is going bust, but it will be a very slow process, and early adopters of the new tech and trend will continue to make handsome returns on their investments in this sector. Raoul Pal has a broad and deep understanding of financial markets. He is often called the leading business cycle economist and economic historian. Raoul Pal regularly emphasizes that crypto markets are cyclical, and the price usually trends in line with the Bitcoin halving, which happens every 4 years, with the sentiment usually being positive in the run-up to each halving. Halving cuts the Bitcoin miners' rewards in half and halves the rate at which each new Bitcoin gets released into circulation. Cycles usually follow a pattern of 4 stages. Number 1, accumulation phase. Number 2, the run-up phase, bull market. Number 3, distribution phase. And finally, number 4, the rundown phase, bear market. Raoul Pal believes that 2 things dictate the market cycle: the value of the technology and global liquidity. When liquidity dries up, people have less money to invest in assets, which leads to boom and bust cycles. Paul believes that the armchair quarterbacks who say that crypto is a Ponzi scheme after they react to price fluctuations will be buying Bitcoin and Ethereum during the next cycle. Unlike other assets, Paul says each low leads to substantial price increases because Bitcoin is still going through this discovery and adoption phase. He says the liquidity always comes back and the network keeps growing. Paul says it's a game of survival, and that you should try and go against the grain of market sentiment by adding to your position, because, as he says, you may surprise yourself beyond your wildest dreams by the end of the decade.
The US holds the one weapon, which is the dollar. 87% of every single trade transaction on earth is in that one currency, and they will use it to their advantage. As we saw with Russia, they just cancelled their reserves. You know, it's staggering how powerful the US is. So that change to a multipolar currency world will take time. It just simply can't happen because the world is 400% of GDP in debt, 400 and something percent, of which at least 50% of it, maybe 70% is in US dollars. So if anybody tries to move away from the dollar policy, they've got no dollars to pay their debts, in which case everybody goes bust. So all of these things have to be done slowly. We have to split the world apart slowly. We have to get rid of this debt situation slowly, because if you don't, all outcomes lead to complete societal global collapse. I lived through the European banking crisis. Our local bank in the village went bust and took people's money because they converted deposits into preference shares and then defaulted on the whole fucking thing. But they were terrible. I mean, the Spanish banks, the Italian banks, what they did was awful. And then Cyprus was the big ringing the bell moment when I started trying to set up the world's safest bank. And then basically I was told, if you have a non-fractional reserve bank, you'll take all the deposits, which Caitlin Long is learning. They don't want it. So that's when I learned about crypto. And that case is I mean, this banking situation is almost identical to the European one that happened. And we know the answer is, right, we've got all this commercial real estate stuck on these banks as well. That's going to end up in the balance sheet of the Fed. The Fed will be taking chewing gum wrappers as collateral, to give out loans to stop this thing imploding. Let's take anything, as the ECB did. So the UK is the single greatest regulatory arbitrage country on earth. It's made more money out of regulatory arbitrage from the US than anybody else ever. And you need to understand the financial market. So after Nixon depegged from the gold standard, the FX markets were not. FX was a regulated market by the United States because they wanted to stop capital flight. So the UK took it over and the FX market was born, became the largest market the world has ever seen. Then in the middle of that, people wanted dollar funding. And the US had capital restrictions. So the UK said, we'll start something called the Eurodollar market. It became the largest market the world had ever seen. And then what happened was, this is the part of my career, is suddenly some bright sparks invent a swaps market and the derivative market explodes. The US bank regulators wouldn't allow them the reg cap to do it. And the UK changed the reg cap rules so they could do it in size, as did the Europeans. So they got all of the derivative markets. So London remained the largest financial centre for 30 years because of US regulatory arbitrage. It went back to the US recently because the Basel III was so restrictive in Europe that it went back to the US. But the UK have been making very strong statements about crypto, as have the EU, even France, even Macron is talking about it.
Yeah.
As is Switzerland, as is Singapore, as is the UAE, as is Hong Kong. That is the group of countries that enabled the Eurodollar market and the FX markets. They're all there, and the derivative markets. And the UK plays very well with that group of people. And the Cayman Islands is the other one because of how the offshore funding markets work. So they're all there. So my guess is if the US screws it up, the UK will eat its lunch. And my guess is they've seen that opportunity and they know the rule book. Because there is demand. And we'll see Coinbase moving. We'll see Circle, I think, are moving to Paris. We will see this endlessly because it's exactly why the big banks in the US ended up in London. I looked at Bitcoin. I got it immediately and wrote the first ever macroeconomic strategy piece on Bitcoin and how to value it back in 2013. And I bought it at $200. In the piece, I said, listen, if I value it in the same way gold stock to flow is valued, then Bitcoin with gold at 1,300, I think it was at the time, then Bitcoin's worth $1 million. And it's at $200. So I said, okay, look, let's assume I'm a complete moron and I need to discount myself by 90%. So at $100,000 fair value versus a $200 price, I said, this is the best risk reward we will ever be given in our entire careers. And so I bought it, as did a bunch of other people, saw that article, got passed around a lot. It then went up 5x in 3 months. And I'm clearly now thinking I'm George Soros, maybe Julian Robertson, maybe Paul Tudor Jones, all rolled into one huge ego. It then falls 87.5%. But my time horizon, I said, it's a call option, but it's got an unlimited time horizon, but my time horizon is 5 to 10 years. So I'm happy and I don't really care what happens to it. Fine. And I sized it appropriately. So I held it, went all the way down, kind of kept off my screen, didn't really care about it. Then it starts crawling back up again. But then it gets the big run up in 2017 and the forking wars happened. And people were forking the Bitcoin chain. I'm like, what the fuck does this mean? Am I going to back the wrong chain? I don't know. I don't understand it well enough. So I took profits at about 2,000. I've made 10 times my money. I had broken my rule, which was I was actually in this for a longer term time horizon. So I didn't trade my strategy because I got confused on the route. Anyway, 10x, I'm super happy. It goes up another 10x. I'm like, I don't really care. I've made 10x in a trade. By anybody's standards, that was a great trade. I then wait, follow it, get involved in it, educate people, all of this stuff. Then April 2020 comes along and I load up the boat. And it was my biggest bet I'd ever made. Put it into that. Pretty much nail it. It goes up. Great. I then recently went back and thought, how did I do? Because, I bought it low, I sold it high, and I bought it in a sell-off. And I went back and thought, what happens if I just kept my original bet, which was much smaller, and just held on? I would have done 5 times better. I'm like, holy shit. Because none of us, we're so used to cyclicality. We don't think of exponentiality. And because I bought it at 200, sold it at 2,000, bought it again at 6,500. I'm like, you moron. Then I figured out, okay, I know what you should do in the cyclical asset that goes on a secular uptrend. You should buy it every time it gets to the sell-offs. We know this. So I figured out if I just added the same amount as my original bet every time it got to the bottom of the cycle, and I assumed that I would miss the bottom of the cycle by 40% because I'm a moron, I would have made 25 times as much money. That's entirely my strategy, because I know how this plays out with these longer term assets. So I don't trade it at all. Yes, I've made, the biggest switch I've made was when I sold most of my Bitcoin and bought ETH back in whenever that was, 2021. And other than that, I have a few positions and occasionally I'll reweight, but I just don't trade it because I just think I've never found anybody who's made as much money trading cryptocurrency as they have done holding it. And the NFT market is a fabulous way of doing this as well, because it's a call option on ETH. You get an ETH exposure, but if you choose the right NFTs, and I see what you guys have done really well in this, and you guys are looking at more of the fine art side and the punk side, this stuff will do fine. And in a bull market, everybody wants trophy assets because they have more money. So they buy punks and they buy fidenzas and they buy whatever it is, beeples and stuff. It goes up more than the market. Like high-end property always goes up in a bull market because there's excess capital, limited supply. So that call option, let's say punks go from 70 to 150. It's doubling what ETH does. Now, there's a chance punks could triple and ETH could go up 10x. Well, then there's a 30x out of this. So it's all fun to be in the NFT market, but there's actually a serious thing. I mean, I probably don't have more than 10% of my crypto exposure to NFTs because I'm just not smart enough in the space. But there's some real opportunity within that as a extended call option on ETH or Solana or whichever one you want to choose.
Time for the important announcement. Now you can join our community of 5,000 plus members and active stock market investors and receive the latest timely stock market and economy related updates, like what stocks to buy and what stocks to ignore or sell to save your portfolios. Economy and stock market related commentary and alerts are shared regularly on a weekly basis. You can also chat with me during market hours and ask me any questions. Join our community on Discord through Patreon. Upon becoming a member, you'll be able to enjoy some great perks. For example, you'll be able to receive proper buying and selling alerts for a wide range of potential stocks. We'll also share tips and alerts for option trading. You'll receive a weekly guide for stocks performance and updates with technical analysis. You'll be able to chat with over 5,000 like-minded members all the time. And you'll also be able to chat with me during market hours. I'd be delighted if you could join us. The link to join is given in the description below. Thanks, and see you on the other side.